very careful path right now, and I must say that we're coming off pretty well. When everyone else is flailing and wondering what to do in the times of Trump, we're holding our own.
There's no rush.
There's no rush, and we're also playing it minute by minute very, very well in a time when anything can go in any direction.
And we're not antagonizing anybody. We're just playing our own cards.
Exactly. We're not antagonizing anybody. So even though you might not see it in the markets right now, that base case for a positive outcome on trade deals is very much there. Meanwhile, Indian markets are showing strong gains in a pre-budget rally. They were yesterday at least. Nifty reclaimed 25,300 and there could be a short-term relief bounce. While momentum is improving, the overall trend is cautious as Nifty is struggling with resistance from key moving averages. Analysts are watching 25,450, 25,500. That's the band to watch out for. A decisive move above this will trigger a broader rally towards 25,800 before the budget. Immediate supports at 25,200. Break below 25,150 could lead to a retest of the 24,900 mark. Nifty cooled a bit, suggesting bulls are cautious and the panic seen last week is subsiding. Meanwhile, as far as Bank Nifty is concerned, better relative strength has climbed back above all its key moving averages. Resistance at 59,690, 59,800, 59,970. Supports at 59,340, 59,230, 59,050. So those are some of the key levels to watch out for. But let me go across to Puneet, who's joining us this morning, as always, to give us the F&O setup.
Well, thank you for that. And, largely, again, yet another 100-point rally at the end for the Nifty 50 yesterday that boosted above the 25,300 mark. We continue to monitor these key levels, and while the implied open indicates for the first time this week that we could have a start in the red, the quantum will be something to watch. In terms of the open interest, we've seen a slight inch up for open interest of almost 3% for the Nifty 50 futures, while for the Nifty Bank, the open interest increase has been quite meaningful. So you are seeing positions being built yet again for the February positions in the Bank Nifty, much more galloping in pace compared to the Nifty 50. We've also seen a higher rollover essentially in the last couple of days before the expiry in the Bank Nifty compared to the Nifty as well. So clearly a area of strength for the markets. For investors, bought almost 480 crores in yesterday's trading session. It's been the first time where there's been even some green seen in that particular aspect, because of almost 14,000 crores each sold in the last 2 weeks, and we started off selling as well. So that's a key positive. While domestic investors continue to hold the fort very strongly as well. A slight build-up of longs by the foreign investors in Nifty futures, but the index long continues to be at 11 to 12%. We have been highlighting to wait a bit, at least till Monday and Tuesday, to start seeing a trend in the index long being built by foreign investors. Well, the put-call ratio again, very, very stable at 1.07. Slight inch up for the puts compared to the calls, but largely very stable at this level. Finally, in terms of stocks, open interest gainers, we've seen a couple of them being in focus. Yesterday, Oil India, of course, because of a long build-up, seen 32% increase in open interest, and Hindustan Zinc continues to show up on our radars yet again week after week. But the open interest losers, there's not too much trend being formed as of now because of the open interest change. So largely a very important day as well because of the reactions of the big heavyweights, the Larsens, the Marutis of the world in terms of earnings reaction, but a big day in terms of earnings today and tomorrow just before the budget.
And a lot of the mid-cap and small-cap earnings will also bunch up. I think the last word on whether the earnings season was a hit or a miss is still to be told. So we'll wait for some of those. But first on my watch list is Birlasoft. Overall, a good set of numbers. It's been a stable third quarter. Headwinds seem to be behind. Sustainability is awaited. Margin expansion also continues. The total contract value, in fact, for the company is recovered from the bottom that we saw in the second quarter. Total contract value is up 89% Q on Q. Soft growth is expected in quarter four. Core numbers on your screen. Revenue is up 1.4% at 1,348 crores. EBIT up 16.4% at 225 crores. Margins looked good, recovery to 16.7%. Net profit was up 3.3% to 120 crores. Remember, there was an adjustment of about 40 crores to the PAT for the new labor code as well. Somani Ceramics is the other one that I'm looking at. And this is also a positive. Revenue was in line with estimates. Improved utilization and one-offs is what has aided profitability. So you will see a good profit number there. Better utilization, lower brand spends have also aided margins. Volume growth has remained soft and domestic demand will be recovering steadily from FY27. Core numbers, revenue was up nearly 6% at 682 crores, EBITDA up 16% at 62 crores, margins at 9.1% versus 8.3%, and net profit up 94% at 18 crores. So I would say on the face of it, a good set of numbers. Brigade was also pretty much in line, but we'll give it a thumbs up. The average room rates and RevPAR were both up 17%. Year-on-year, occupancy remained at a healthy 76%. Performance was supported by sustained domestic travel demands as well. Margins driven by operating efficiencies and cost discipline. Revenue was up 11.6% at 139 crores. EBITDA up 9% at 47.3 crores. Margins were steady, 34.1% versus 34.9%. And profit was at 20 crores versus 8.39 crores. So big jump over there. So at least the first three on my list seem to be pretty good.
You know, I've got Larsen and Toubro on the top of my list, and I say broadly in line with expectations, but if you were being very harsh, you would say there was an expectation of a 13% increase or a little over 13% increase in revenue. It's coming at 10.5%. So some might say, I mean, you will have a few brokerage notes that say it's a bit of a miss on the revenue front, but broadly it's in line with expectations. That net profit miss is largely on account of the labor code impact, and that one-time impact has been measured at about 1,190 crore rupees. The order inflow is strong, in fact at 1.36 lakh crore rupees. It's stronger than expected, a 17% increase, and now international orders constitute about 49% of the book compared with 42% a year ago. You've also had EBITDA margin improve to 10.4% compared with 9.7% a year ago, and the EBITDA has increased as much as 19%, 18.6% to be precise. More than anything else, the outlook looks positive and there's expected to be a better execution in the fourth quarter, and the management is confident of achieving its full year target, FY26, 15% revenue growth projected. Bernstein is one of the notes that I picked on L&T. It said maintain, outperform. I like the line that they've said beyond the fact that they say it's another solid quarter. They said this is the stock to buy if you believe in AI or even if you don't. Revenue is the only real miss according to them, but the company is confident of hitting its year's guidance, and working capital position and returns are strong. So watch out for this one in trade today. Vernova, it's a pretty strong set of numbers for this company. Strong revenue increase and margin expansion. They've both aided PAT growth. PAT growth is despite a 69 crore impact on account of the new labor code, and new orders booked in the quarter stand at close to 3,000 crore rupees compared with 2,080 crore rupees in the previous year's quarter. The order backlog at the end of the quarter stands at about 14,310 crore rupees compared with 13,110 crore rupees at the end of September. The margin is also in line with the last two quarters, and it's actually a pretty decent uptick compared with the year ago quarter. It stands at 26.7% compared with 16.7%, as a result of which that PAT number looks particularly strong at very close to 300 crore rupees compared with 143 crore rupees. All told, a good quarter. It was up and about in trade yesterday as well. RVNL, this stock also gained quite considerably. The latest update is with regard to a joint venture that has gotten a L1 declared for them with a project of about 1,200 crore rupees from the Northern Railway. It has to do with a bridge over the Ganga. This is a joint venture with GPT Infra, so watch out for that second counter as well. Their share in the joint venture stands at 60%. I'm talking about RVNL, the rest held by GPT Infra. 48 months is the expectation of the completion of the order.
Okay, I have three winners too on my list, and one of them is Garden Reach, since defense was out there. Banta hai. So revenue is up 49% at about 1,900 crores. EBITDA margins, or EBITDA at 172 versus 75, blockbuster numbers. But the margins, as a result of that, right, 9.1% versus 5.9% on a YOY basis, and that leading to a 74% uptick in profitability. 171 crores versus 98 crores. Frankly, you can't find anything wrong with these numbers. So keep an eye out for Garden Reach Shipbuilders. Strong quarter. Thyrocare didn't have a bad quarter either. Revenues were up 17%. And if you look at what Metropolis or some of the others have done, this is in line with what they've done. But their EBITDA performance was much better, Thyrocare's. The EBITDA was up 38%, as a result of which margins at 29% versus 25%. And net profit up 52% at 29 crores versus 19 crores. So very strong show here. So keep an eye out for this one too. And then we're talking about how microfinance firms have done very well. Look at Satin Credit Care. Revenues up 9.3%, but EBITDA up 34%, as a result of which the margins went to 51.5 versus 41.9. I mean, look at that entire cohort of stocks and the reportage that they have done this quarter. Quite stunning, really. Net profit for Satin at 72 versus 14.25 crores. I mean, just superb numbers. So very likely that this one too could have a positive move. So 3 winners on my list, guys.
And defense, of course, in focus. There's a note yesterday which said that in the budget you could have up to a 20% increase in allocation for defense, and it probably makes sense considering the kind of year that we've had with Operation Sindoor. BEL also has been in focus to a large extent. In fact, I want to go across to Amit Anwani, who's joining us now. He's Vice President Research at Prabhudas Leeladhar and looks at this pack very closely. Amit, what are we seeing right now in your view? Is this a pre-budget rally in the hope of an increase in defense allocation? Are the numbers that we've seen so far better than expected? Is it the EU-India FTA which is playing out? What do you see as the core reason for the rise in defense stocks, and will this sustain?
Hi, morning. So, of course, multiple reasons, but if you see primarily since there's been a very strong order book built up, which has happened over past 3 financial years with many DPSU companies, we saw very strong numbers. Yesterday, we saw very strong numbers posted by Bharat Electronics, and they kind of maintained their 15% guidance and upward of 28% margins they have already achieved in 9 months. And it seems quite confident in terms of order inflow, considering that there's been a lot of Defense Acquisition Council approvals which have come over past 24 months. We saw GRSC posting very strong numbers, and these are all because of the very strong order books and kind of operating leverage and efficiencies they're able to deliver, which is flowing through the PAT. But having said that, as you also pointed out, the EU deal, pretty early to say the rearm package, which was announced a few 3-4 quarters back, and probably in future there could be some support for export orientation, where the government has also been critical of targeting exports to 50,000 from what we have achieved today is about 26,000. So I think definitely it will be a support. And third element, definitely budget. As you said, if you see from F19 to F26 broadly, there were a couple of years where the budget was kind of 1,60,000. This year, I think last budget was about 1,80,000 crore defense capital allocation. But if I see over the period of 5 to 6 years, it's a good 12% CAGR, 10 to 12% CAGR already. Now the hope that the budget could be more than double-digit higher end of probably expectations between 10 to 15% is also supported by the approvals which DAC has given over past 2 calendar years. So notably 4,70,000, if I see the numbers, was the DAC approvals in CY25 itself, which indicates a lot of these orders will come in RFP, RFI and tendering over next 12-18 months. Yeah.
Amit, interesting points that you made. But having said that, I just want to ask, even if there is a sharp increase in allocation, in terms of revenue recognition and execution, do you see that we'll have to wait for some time for these to actually reflect in the numbers, in the earnings of these companies? And of course, nobody is arguing against the prospects of Indian defense companies. The technology that they're working towards is clear for all to see. They've seen proof of concept as well. So is there expected to be, in your opinion, would you be comfortable waiting for 4 or 5 quarters for this to pan out?
See, of course, the few companies where supply chain is important, and all these companies are working towards localization. So, if I recollect, even Bharat Electronics has been highlighting this that there's a lot of focus in terms of localization, and they have kind of achieved more than 70-75% localization or indigenization in whatever platforms they are working, except probably the semiconductor chips or the bottom end of the component where they're still working. So I think localization has been a key element over past 5-7 years to really be, kind of predictable in terms of execution. We have seen HL facing issues because of engine, which is pretty much known to all of us. So I think even in the upcoming budgets, there's been, I think, should be great focus in terms of localization, in terms of TOT, transfer of technology for a few platforms, so that we are able to execute. But as you rightly said, I think for me, next 2 to 3 years would be a period when we can see kind of a very strong CAGR for few companies like, for example, GRSC, HL, MDL, which all of these guys have accumulated very strong order book over past 2 to 3 years. So instead of looking at 3 to 4 quarters, which may not give a very big picture, but obviously on the low base, we are seeing that numbers optically look very strong, as was the case with GRSC we saw. But for me, I think if I take cumulative 2-3 years, still looks pretty strong basis the order books they've accumulated. And I'm pretty sure government is focusing on localization and vendor base for defense locally, so that the execution should not be hampered despite this very strong order book.
I mean, just one question. A lot of global outreaches and quote-unquote tie-ups, if I can loosely use that term. The India-EU FTA is one. I think the Israeli premier was on record saying that they are moving away from being dependent on US to expanding with India, Germany and the US. And apparently PM Modi is going to be visiting soon, so on and so forth. So a lot of things happening on the side, on the global level as well. Is that a threat or is that an opportunity for the incumbent Indian players?
The way things have moved locally, as I explained, there's a lot happening in terms of multiple war fronts, and that is also a key reason that the valuations for defense have not sharply corrected or came back to what it was 3-4 years back. And I think in that event, geopolitically, a lot of things are changing, as you highlighted, Israel, EU. I don't think it's a threat. In fact, it could be an opportunity for few platforms where we have competitive advantage in terms of manufacturing that. I think the major portion we are lacking is the technology and R&D, where the government has been focusing that a lot of private sector is involved in R&D, and we are able to either get a transfer of technology for the projects or platforms where we do not currently have the R&D. And we have seen through IDEX and other platforms, government promoting R&D investment by a private sector. So I think barring very large platforms, which we might not still be prepared, but I think for a lot of, let's say, defense electronics or missiles, which we are already exporting, and there could be good demand. We have seen through offsets in the previous projects, a lot of orders were tendered out to the Indian mid-small Indian companies in defense electronics in the past. So I think all of this could emerge as an opportunity in the long run. So we have to really wait and have patience for that.
Okay, Amit, we'll leave it at that. Thank you so much for the insights. Really appreciate your time and looking forward to talk soon. Maybe post the budget, we'll have a chance to talk again if indeed the budget has this big bang, how do I call it, mention of defense and capex outlay as well. But time for a short break right now. On the other side of the break, we'll get you the top trading strategies for today.
1st February every year. Hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है, आगे नहीं सब.
Welcome back. You're watching India Market Open. Implied, let's pull that up. Still showing a bit of a soft start, but are we finally going to see a budget rally, pre-budget rally? Der aaye, durust aaye, if it does come. I don't know if that's what we saw yesterday. Parag Thakkar and Kujpora in our studios as always. Parag bhai, what did we? Was that a pre-budget rally? Yeah. Was that a relief rally? Was that a okay? How bad can it get rally?
No. So basically, markets were oversold, right? Completely. We were discussing this in last 2 days, 3 days. The markets were completely oversold, and there was some short covering bound to happen before budget, because people who were short, even though they went right, they would like to book their profits. So I think let's see now. Everything hinges on budget. When these geopolitical worries keep coming today, this Iran thing is again there, and that's why crude oil is at 68. And Fed rate cuts have not happened, which was expected actually, in my view. So I think we are going into the budget again with, I would say, a very light position. If something positive comes in budget, then we should see a good rally. And if US-India trade deal happens, that's a long-awaited thing.
But I think on the short side, on the FI short side, it's actually, I mean, domestics may be light position, but the FIs are heavily short.
Yeah, 85%, right?
Yeah, 87% as things stand, right? So, in effect, if there is a bit of short covering there, either pre or post budget.
Correct.
It could
And earnings are not that bad. Not that bad.
Yeah.
So I think especially a mid cap and small cap are perhaps
many
better
mid
than
caps and small
expected.
caps are reporting good numbers.
But is it more, and from the derivative side or from the technical side, is it more that a base is likely to form and you're not likely to fall below a bottom? Or is it that upside is potential before the budget? Which is more likely?
I think you've put it very beautifully कि भाई range है market में. Which one is more likely? I think the downside from here on is a little restricted, because if any positive news comes about, correct, then you're likely to see a very sharp up move. But before all of that, who's falling sick on this Sunday? I'm applying for a sick leave.
Yeah.
Already.
Why? But you have to recover also now for Feb 2nd.
For financial...
I think, can I tell you something? I think we're going to have so much fun this Sunday, and this is something that I've seen of the last several budgets that we've been covering here. We have a blast. Budget day is fun. You should, viewers should get a sneak peek of our newsroom. Yes. Everyone's excited. There is so much buzz. And I think you guys are going to have fun too.
And if there's one day that financial journalists don't fall sick on, it is the first
Even if they fall sick, they make sure they
have to be on duty. No, of course, I was kidding. I'm sure viewers and you also know how regular I am here, right? That was on a lighter note. And I have seen the last few budgets, the last one being here in the newsroom. It's an experience. You should get those, BTS behind the scenes, kind of shots out there. It's a fun experience, and as and when it happens. But to come back to the markets, nothing to complain about, right? Lower high, lower low formation that we spoke of yesterday, that was broken. 200-day moving average, that was held. Nifty closed above that. Long build up on futures. PCR back to neutral zones, and RSI is now turning upwards. So all is well, right? Not really. The reason being the quality of this recovery has not been so great. Let me give you some other stats, the qualitative bit of this. Still, you have 348 stocks from the NSE 500 which are trading below the 200-day moving average. Peak just about last week was 365. So we've not really gained a lot of ground. If you see the 20-day moving average, 384 stocks still below the 20-day moving average. This peak was close to 445. So yes, there has been improvement, but even at these current levels, they're at so elevated levels that they've not been in the last 9 to 12 months. So my point being that yes, there has been some recovery and the index has shown a rebound, but I will still call it a rebound rally. And just to answer Alex's point, keep budget aside. Could there be more downside to the market? Given the kind of setup that we are in, there could be. But I would still say that 24,800 and 25,000, that's a good support zone. We've respected it, even in this fall. And there's a good possibility that going forward also that might be respected. So do we create long positions? We play for rebounds. This is too early to call it a reversal. I'm actually more excited for the bank nifty, the 50 and the 20-day moving average that was proving to be a resistance. Yesterday, we closed above that. And again, we're bang in the middle of that 58,500, 60,500 range. Any kind of pullback, let's say close to the 59,000 mark, should be taken as an opportunity to go long on the bank nifty for a favorable risk-reward ratio. So more constructive still on bank nifty than on nifty. Nifty could perhaps see some upside, but could be range bound given that the big event is around the corner.
What about ideas in such a scenario?
Luckily, some of them have been doing well. Markets have been kind at least for the last couple of days. So
I'll give it, Kush. So it's not all luck.
Thank you so much. I mean, it's just heartening to see कि अगर उससे viewers का फायदा हो रहा है तो that's why we do it, right?
Yeah.
So I'll give you an update on a couple of calls, but before that, fresh ones. HCL Tech. The IT space has done rather well. If you see Telecom, the stock that we've been speaking about for the last couple of days, that's been doing well, gaining ground. HCL Tech joins that setup. So I remain constructive on HCL Tech from a very near-term perspective. Good volume accumulation, good up moves. 1755, 1780, these are your targets. 1705 is where you keep that stop loss. One from the mid and small space, Kirloskar Pneumatic. Here too, I have seen a very healthy accumulation. There was consolidation while the market was cracking. So that's relative strength for you there. 1160, 1190, those are your targets. 1100 is where you keep that stop loss. And now the update, that's on Jindal Steel. Remember how we spoke yesterday that while the metal pack, at least most of it, should be bought on declines because they've run up quite a bit. Jindal Steel hasn't. Yesterday we spoke about this, the first target of about 1110, that's been met. You could now hold it for targets of 1140 and 1170. The initiation price of 1090, that becomes your trailing stop loss now. So HCL Tech, Kirloskar Pneumatic and Jindal Steel.
All right. So we've discussed a lot of stocks already. We're going to talk about more in the way of earnings and Parag Bhai's view in particular. But let's take a look at what is on the watch list beyond earnings. And you have to start with gold and silver. Actually, I'll come to that in just a bit. But Vodafone Idea, positive comments. And we'll talk about the implications of that as well. A turnaround might be in sight according to the management. Hin Zinc. Man, look at gold and silver prices. Gold prices up 30% in 2026 alone. You can't stop that rally, at least for now. You'll have to wait for the underlying to crack. Muthoot, Finn and a couple of other, Manappuram as well, gold loan entities would benefit from an increase in gold prices because they're able to lend more with the same amount of gold. The LTV or the loan to value can be the same at about 60% or thereabouts, but they can lend more. But remember, CSB cracked yesterday. I want to get Parag Bhai's view on that. HBL Engineering, there's a joint venture with Cochin Shipyard that you should watch out for. What else is on the list? You have Canfin Homes, there's RBI reappointment of the MD and CEO. So there's stability with regard to top management. Sula has come out with a comment on the exchanges saying that there's limited impact on account of the India-EU pact. We'll have to actually see and wait to see whether that actually pans out. GPT Infra, I already told you about the RVNL order. Well, it's a joint venture partner in that 40% share, and so it's a significant order, 1,200 crore rupees. Dynamic Cable has a PV solar cable certification that they've gotten. There are a few more stocks that you should watch for, and eClerx is one of them. 1:1 bonus share issue has been approved by the board. Biocon, there's progress with regard to the API facility in Andhra. Castrol has signed an MOU with HPCL, and Reliance Infra, the Enforcement Directorate, has attached more assets. So watch out for these in trade. I want to get Parag Bhai's view on CSB Bank because the market looked very unfavorable Parag Bhai, on the results, right? You had an erosion in the asset quality, and so despite that gold benefit that they have with a sizable chunk of their asset book, it's not looking very pretty. So how would you play the gold loan picture?
So basically, see, I have always played gold loan through also banks who are lending against gold. For example, City Union Bank we have discussed in the past many times, Federal Bank we have discussed in the past many times, and these were my top picks. Not at these prices, but I would say I have booked profits in all of them. So because in my view, these are the banks which, where it is not gold loan is not their core only business. For example, City Union Bank, 28% of the loan book is gold loans. For Federal Bank, it is 13% only. But CSB, last time also we spoke, right, that I don't want to chase the momentum. And this is what happens when you chase momentum. Suddenly you get a negative surprise and stock cracks 18%. So that is why I have always kept away from chasing momentum, and so when nobody is looking at it, that is the time to accumulate.
But the problem is that this has been going on for a year. I think it's $500 up in the last few days, gold prices. So at some point, we're going to have to stop and say that, okay, this is now one secular bull run. I don't know what else to wait for.
No, I'm not saying about gold. I was talking about gold loan finances because Alex's question was on CSB.
Okay.
Yeah.
But so gold as the underlying story.
So I'll not chase momentum. I'll stay away from it. Let it move up. Let people enjoy the party.
Okay.
That is a clear view.
Okay, let people enjoy the party. Well, what is the party going on, and is there going to be a party on the 1st of Feb? Samit Sarkar joining in with what he's hearing on the street. Samit, what is the mood looking like?
And the mood isn't that great given the fact that the recovery, we have seen a recovery for the last couple of trading sessions, but it's largely because of a short covering or short squeeze that we are seeing in. It's not that people are going out and buying stocks given the fact that the valuations have now come off from their recent high. So not much of bullish sentiment in the market. Few stocks that dealers have highlighted in the trade. DLF is one counter. The stock has been under pressure of late, but dealers believe that the selling pressure is now largely over, and they're expecting a positive news flow regarding the launch of Dalia's phase 2. This is expected to come in soon, and that could be one of the key triggers for the counter. Jindal Steel is another counter that's on the dealers list. There are buy flows on the institutional desk. Dealers expect both foreign and domestic institutions are also accumulating this counter in trade is what dealers have highlighted. For Paytm, there are buy flows on the large HNI desk. Dealers are expecting a positive announcement to come in very soon. And SBI Card was part of a segment yesterday where we did indicate that there are some buy flows because the credit cost is expected to be on the lower side. And yes, the credit cost has come in around 70 bips lower for SBI cards in the third quarter of FY26.
Interesting. Okay. Well, a lot of stuff. Thanks, Samit, for that. But while you are with us, let's talk about Vodafone, right? Because they have outlined a 3-year turnaround roadmap as well and a lot of other things. So you track this so closely. Take us through what stood out for you.
Well, quite a list of positive commentary that has come in from the management side in yesterday's Vodafone Idea's analyst meet that happened post-market. But the task or the guidance that the management has given is quite ambitious and seems to be a tall task for the company. I'll outline a few of them that the management stated yesterday. Firstly, they are saying that they will focus now on sustained customer addition, double-digit revenue growth, and they're expecting their EBITDA to triple over the next. They're expecting their cash EBITDA to triple over the next 3 years. They're looking to raise a debt of close to 35,000 crore rupees, and they'll invest close to 1 lakh crore rupees in the business over the next 3 years. And this 1 lakh crore will be on the capex side and the spectrum liability that they have to repay. Now, of this 1 lakh crore, 35,000 crore is something that the management will raise via debt, and 65,000 crore rupees is something that the management is expecting they'll get from internal accruals. Now, they are also not considering any equity infusion at this point of time because as per the management, Vodafone Idea does not need a fund infusion. They might look for a fund infusion after 2 years, but they also said that both the promoters are deeply committed and will take a call on equity infusion whenever needed. Now, they have also said that if there's a shortfall, then Birla Group has always remained committed, and they will be supportive even going forward. Now, when it comes to tariff hike, now this is one commentary that could dampen the street sentiment here, because they are saying that industry does need a tariff hike, and for Vodafone Idea, tariff hike is one of the most important component to triple their cash EBITDA over the next 3 years. But they will wait for leaders to take the tariff hike, and the Vodafone Idea will not take a lead when it comes to tariff hike going forward. And lastly, the management also said that the government is unlikely to raise their equity stake beyond 49%, and any merger with BSNL was also ruled out in the analyst call. Now, ace investor Madhu Khela was also present in this analyst meet, and he also asked few questions to the management. Do listen into what their answer was.
If there is a shortfall in EBITDA number, then will it be a call on the promoters for additional equity, or it will be a call on shareholders?
I would also say that Mr. Birla, particularly, especially in this company, he's the largest investor across the group, what he has done for this company. So I think you have to see this question in a context. He has always remained positive, and he has invested when there was a need. And tomorrow, theoretically, if there is a need, I don't think promoters will run away and will not take care of the company. So I think you have to see this question in a slightly different context.
We are a very formidable, strong promoter-backed organization with extremely good, excellent execution capability, which was only not able to perform because of the AGR overhang. I think once that part is behind us, which is behind us, I think it's a three-player market. India is a large market. I don't see that, they should be worried from that point of view. But yeah, but we are absolutely in the market to give them a tough competition.
Okay, all right. So that's the management of Vodafone Idea. The question is, what do the gentlemen at the table think about it? So Kush very clearly has said this is not something that he'd trade in, because it's not something that he'd invest in, and this is his standard statement. But having said that, Parag, where you've heard what was said, is it going to be a turnaround in your opinion?
In my view, government is very clear that they want a third player, and of course the promoters' commitment is now also there.
I think that is the most important part.
Yeah. So I think things will turn around. This is my view, and I am going to play it through Indus Tower. Because if Vodafone suppose survives, it does capex, it is beneficial for Indus Tower. Indus Tower, see, if you see the market cap today, even after the rally, and huge outperformance is also 1,12,000 crores, while they generate a cash profit of say around 15,000 crores every year. And it's an annuity cash flow business, completely annuity cash flow. The only worry was that whether Vodafone will survive and whether Vodafone will remain their big customer or not. And if Vodafone is going to survive, I think Indus Tower should continue to do well.
And I think Indus thus far has, let's say, been hesitant, if I can use that term, to give out a strong dividend. I think once a flavor of the dividend or the whiff of the dividend comes in, the trajectory of Indus might actually change quite dramatically.
Plus, they are investing in Africa also now for growth, and this dividend also can come when if the Vodafone cash flows are assured now, then they can be very confident about giving dividends also. And they were giving big dividends till this Vodafone episode started.
What is the price call, Kush? Because you've been sitting there silently with this expression. I'm thinking he wants to say something. But what is it? I think the last target price I saw on one of the notes was 11.
For me, Alex, we've been doing this for so long together, even on Ask
Profit.
Okay,
do a Vodafone plus Indus. It's just one of those stocks that is so widely owned by retail investors for some reason.
And that's the problem. There is a lot of interest, but because there's such heavy retail interest, you will always find heavy supply pressures from the top. In fact, if I had a blacklist, this would be one of those stocks which I wouldn't really, in the sense, look at the gashes that, come about when they do. You've got 8-99% ka drops on a single day. So if you're holding it, महीने भर का कमाई वो एक दिन में निकल जाता है वाला story है with Vodafone Idea. But just for levels, there's a good support zone at about the 9.5, 9.6 zone. If you have a position, you could continue to hold with that as your stop loss. On the way up, convergence of the 20 and the 50-day moving average comes at 10.85. So that's your target from a near-term perspective. still wouldn't suggest a fresh trade, but this is only if you have a position. Indus Towers, on the other hand, I like. There has been fair bit of consolidation in the last few days, but the medium-term structure of on this one, very interesting. Just a mild hitch around the 430, 435 zone, but I think once that is taken out, you will see the stock zoom to the recent swing high of 455 and higher levels. Volume accumulation also very healthy. So definitely, if you have to play this via Bharti or via Indus Towers.
Okay, a few others that I wanted to talk about very quickly, and we are just about 3 minutes or to the pre-open session. One is SBI Life. Some positive notes on it today. I mean, Citi says they've shown another strong quarter, sustained improvement in product level margins, further headroom available for margins as well, expanding agency productivity to follow with a lag. Jefferies is also quite positive. They're saying encouraging rebound, normalization ahead, strong premium growth, but guidance for a full year is unchanged. GST drag offset margin benefit from better premium mix. I wonder if either of you looked at SBI Life and what the thought there is.
Decent result. So stock a very limited downside and I think 15 to 20% upside. Like many other stocks which have remained stagnant. For example, I was just coming to Dabur. Today there is going to be a result, and there is of course there's a media article yesterday that they are going to appoint a new CEO, Mr. Harjeet Bhalla, who is ex Hershey's and ex HUL. So if that comes through, this is a stock which has not done anything from last 5-6 years, and finally you are seeing some positive energy coming into the company. So I would be say a big buyer of Dabur.
Based on today's numbers?
Yeah, numbers, not numbers. It is around the
new management. New CEO.
Management change.
Okay.
New CEO
and I think the print media said that I think it was reported in ET. And I think there is some substance in that, in my view. Let's see.
So we'll have to wait for that announcement. You know what? I've heard you talk about Larsen and Toubro as well.
Yeah.
And the results were last night. And I said 13% was a consensus estimate for an increase in revenue. It came in at 10.5%.
Correct.
There is an expectation that the Q4 will be better and that execution will take us through that FY26 target. So what was your thinking on the numbers, and would you be a buyer at even this price?
So basically, just to be on record, we booked profits at around 4,100, which was around 52-week high, and it is 7-8% below that. So I would love to build up my position starting from today.
Okay.
After seeing, because the order inflow growth was good.
17%.
17%, yeah. And the entire narrative around order inflow is building good. The stock fell because of that Kuwait order, getting cancelled. And management said on the call that will also get retendered. So I would say that L&T at good, that this price provides a good opportunity to accumulate again.
Would you say that the concern on domestic order flow is overdone? The fact that they have 49% of the order book now accounted for by international.
Yes.
Is that a negative or positive in your opinion?
So basically, see, all the international orders actually reduce their margins, overall margins, because they are coming at the lower margins, because global competition is very high in this business. So the margins are low, but net working capital improves significantly, so ROE improves significantly. So net working capital, even if you see today, they have guided also for lower net working capital requirement. And so ROE has inched up to 16%, which will inch up to 18%. So
L&T is a buy for you?
It is. I mean, even if it dips, close to the 3,700 mark, that's the 200-day moving average. This stock has a tendency of rebounding quite sharply from those levels. Doesn't spend a lot of time below the 200-day moving average. So close to 3,700 zones. If it does come about, then you should consider, accumulating. Even on higher levels, I mean, you can, but if you buy on declines, the risk-reward ratio is that much more favorable. That's all.
L&T spiking in the pre-open session. Some of those early rates are on. I wonder if Paragwa, you've looked at Pine Labs. A bit of a new listing, but strong quarter, and a note here coming in from Morgan Stanley. There, Pine Labs showing sparks in the pre-open session, only the first minute, so keep that in mind. But they have given a target of 260 and maintained an equal weight. They're saying it's a strong quarter. Key positive is strong growth in adjusted EBITDA. They see upside risk there. beat led by better than expected growth in the card issuing business. So this is one that is looking interesting this morning as well. Plus you had Maruti and TVS report. I think the auto majors is one to look at, because now after clarification, it's becoming clear that BMW, Mercedes, Audi is not going to be as commonly found on the streets. Everyone's not going to rush out to buy them. They're not going to get that cheap. Would you look at some of the auto
basically
pack?
TVS as usual, right? As usual. Quarter after quarter, superb resilience, fantastic numbers. It is just about valuation. You can argue that whether I will pay this much for a two-wheeler company, but the company is doing phenomenally well. 50% growth in EBITDA, and who would have imagined 5 years ago that in a two-wheeler company, mature business, you will deliver 50% EBITDA growth. So amazing company by all means. Like Mahindra and Mahindra, both these companies are absolutely phenomenal. Maruti has, I think, disappointed on margins, even though the volumes were very good.
So, but the margin point, Parag bhai, what Puneet was talking about yesterday was the fact that that one-off hit on...
even if you adjust for that.
Even you adjust for that.
Even if you adjust for that, I think margins were, and margins will remain.
This is one of it on labor.
So was included in the cost.
That's for
not
every
as an
company.
not as an exceptional item.
So even if you adjust for that, there was a 70 bips disappointment versus the estimates.
Oh. Shrikant Chauhan with us. Shrikant Chauhan with us, even as rupees breached the $92 mark. Well, that flash on your screen, falling past 92 after opening at 91.99. Very good morning, Shrikant Chauhan. Are you feeling the budget excitement? What is the Nifty going to do today? What are your targets for some of the key indices?
Good morning, Tamanna. Good morning, everyone. So, yeah, the excitement is definitely there in those sectors where there is like specific expectations that government may increase capex or may give special importance to the sector like defense, railway. There we are seeing some buying interest. PSU banks did well in yesterday's trading session, and since last 1 month also we are seeing good amount of buying interest in all the PSU banks. Maybe we can say it's a value play is happening in the PSU bank, but otherwise if we consider the overall performance of the market, then it is not that great. The market is trading below the mark of 25,500, which is not, I can say, supportive for the overall bullish momentum of the market. And below 24,900, we may see a serious breakdown, close to maybe 24,500. So we are at crucial levels currently. Before the budget, if we see the market is sustaining or crossing the level of 25,500, then definitely we will have furthermore scope to move up to 26,000. But if it remains below 25,500, then the market will remain in the range and with a downward bias. So we need to be a little bit careful, and we need to be more and more stock specific in this market.
Okay. By the way, a few stocks that are reacting positively, at least early minutes, right? So Gland Pharma is doing reasonably well. GE Vernova TND, GVTND, is up as much as 6% early on. Hind Copper is 4% higher. Garden Reach reacting to numbers. We highlighted some of these stocks to you in the before the start of trade, and Garden Reach doing okay. Sirma SGS is also up and about. There are a few stocks that are doing not too well on the other side of the spectrum. And you have 5-star that is also reacting to numbers, that is down about 4% or thereabouts. Hind Zinc now swinging from positive 8% to negative 4%. So let's see how, or 2%, let's see how that settles. But specific calls this morning, Shrikant?
Yes. So Alex, would like to go with few defense companies, but in that specifically Bharat Electronics. There we have a bullish view. The stock has broken its important resistance level at 413, and then after we saw a quick rally towards 450, 455. But while looking at its entire pattern on long-term charts, one thing is very clear, that the stock is heading for at least 470, 475 in the near term. In the medium term, we may even see the levels of 500. And in case if there is any lower opening in today's date, then we should look for adding these stocks with a stop loss at 435. As I mentioned, we like PSU banks. In that, Canara Bank is doing well. It closed around 158. The stock is forming rising top, rising bottom series and forming some flag formation at higher levels. So based on technical formation, the next level to watch out for would be 165. And here we can keep a stop loss around 154. So yes, PSU banks and defense should be on the watch list.
Well, lot of movers. Garden Reach is up, Hind Copper is up, Larsen is up 2%, and MCX continues. I think the way silver and gold are going, MCX probably towing that line right now. Let's see. Remember, MCX was also up in trade yesterday, so some stocks are doing really well for themselves. I wonder if car trade would be in that list because Nomura has hiked the rating and target price on that stock, and Sharad Johnson with the rationale of Nomura in the big brokerage call of the day today. Sharad, good morning.
Good morning, Neeraj. Car trade is focused. Nomura has given an upgrade from neutral to buy rating. The target price hike, it's not so much. It's around 3,226 from 3,021 rupees. It's a healthy growth on track. That's what the broking house has stated. Largely the numbers were in line, but the place where the margins are growing, that's where the bullishness is coming in, and the operating leverage, that's also auguring well for the company. Now Nomura is expecting a 21% revenue CAGR growth from FY26 to FY28, led by, of course, a rising competition in the PV passenger vehicle industry. Overall, there will be some gains coming in the operational front when it comes to the digital ad spends and a strong execution of car trade. Multiple initiatives such as the OLX can also help step up the growth momentum as well. So bullish commentary coming in Nomura for car trade.
Okay, thanks a lot for that. 1.72% higher. Kush, fundamental Nomura is constructive. I wonder if there is a trade here on car trade.
Afraid not. There has been quite a bit of selling pressure, hasn't really participated even when the markets were going up. This rebound largely from oversold territories, 200-day moving average around the 22.75 mark being respected. So on a lot of fronts, doesn't really hold ground. Plus, I do believe that, once the stock starts moving higher, around the 2550 zone, there will be supply pressure because that's the medium-term resistance band for the stock. So if you have a position, maybe you could continue to hold with a trailing stop loss, but I wouldn't suggest buying afresh right now.
I think some of the other ones that are moving, I just want to look at Gland Pharma and what's happening with Gland Pharma more than anything else. Maharashtra Seamless is the other one, but it's Gland Pharma, which, on the face of it, the numbers didn't look that great. But the stock seems to be doing well. I think it is the guidance that has worked, Parag Bhai.
No, I think guidance is not that great. I think the numbers were slightly better than estimates, but stock has been completely under pressure. Now, it is a completely oversold stock, so it is just recovering. And I think there was one upgrade which I saw. I don't remember, I read so many broking reports that there was one upgrade in that, and that was mainly due to the fact that one of their old orders which was not getting executed has started getting executed.
So why don't we have a look at it on the charts, because as Parag Bhai has pointed out, it's gotten beaten down quite a bit. Is this that moment of recovery which you would start building on?
So, Alex, base formation was definitely on the cards. It was happening since the start of this year. Positive divergences, fairly healthy volumes, nothing extraordinarily high, but fairly healthy volumes on the upside. Today's move now puts it, squarely higher, very close to those resistances of 1850 odd. After this kind of a gap up, I wouldn't really suggest, buying afresh. It's a good idea to hold it with a trailing stop loss, and that could come around the 1775 mark. But don't buy afresh right now. See whether this gap up sustains, whether the stock is able to close at these levels or not.
Okay. I do want to ask about GVTND because the stock was up about 6% in trade yesterday. It seems like it's another 5% at the start today, reacting to numbers. Parag Bhai, just off the top of your head, and I'm sure you remember the numbers, strong revenue, margin expansion as well. It is along the lines of what it saw in the last couple of quarters, so around that 25 to 27% mark, and the order inflow is good.
Yeah, everything is good for this company, I must say. The numbers, this quarter EPS is, for example, 11 rupees. And so it makes it a 50 PE stock in my view. But numbers were good. And I would say that transmission and distribution, transmission mainly, is the key thing in power ecosystem right now where the capex should be done. Because there's a lot of renewable energy coming in, everything needs to transmit, right? And so this company is in a right space also.
Would this be the top pick in the transmission distribution space?
Based on numbers, yes.
So metals doing well today. The pre-open session has shut completely flat. So on the Nifty at least, metals are doing okay. Nothing great, no great shakes in IT and banking. Just from a budget perspective, I want to look at some of those defense plays. What's happening with the Garden Reach? Garden Reach, good numbers. Cochin Shipyard also reported, but the numbers looked okay. BEL has a lot of excitement as far as its stock is, as far as the brokerage notes are concerned. So those are some of the ones we should look at. What is the budget play, Parag bhai? We're now 2 days away. This is time now to give some budget picks. Are defense companies making the list?
Yeah, see, defense will see increase in the capex. And definitely after Operation Sindoor, you can expect that. And plus the geopolitical tensions going around the world, you can expect.
No, but the estimates that you might see up to a 20% bump up in defense and go up to 3% of GDP, I thought was
3% of GDP is
2.5 to 3% of GDP. Something with Jeffries is saying, I think was a bit.
3% of the GDP is the overall capex number. So capex last year was 11.21 lakh crores.
Yeah.
That is expected that is expected to go to 11.8 to 12.3 lakh crores, according to the various analysts. So let's see what happens there. But I would say that there is a lot of I would say the fiscal room is limited. That is for sure. So we'll have to actually see. So I'll not buy when the stock moves up so significantly. For example, BEL yesterday was up 10%.
Which is the point? Is there more room for growth if there is a big bang announcement on defense?
I think it is already getting started. So the market has already preempted it. So once the news comes out, I think there will be sell on news.
Your favorite defense stock, if any?
Was BEL.
But yesterday it was up 10%. That was the problem.
Exactly.
I heard Shrikant say that he's broken some key resistance levels now.
It has, but a little too much, a little too fast.
Okay.
The key resistance levels, according to my setup, was 425, 430, that zone, and that's been broken with a bang. Could the momentum continue? Yes. Does it become a buy at these levels for a favorable risk-reward ratio? Afraid not. Maybe an HAL over a BEL, but I would rather hold a BEL with a trailing stop loss.
Okay. This is what I love usually. I mean, yes, there will be obviously a dichotomy between a fundamental and a technical analyst, but because we've got two experts and the two of them have their own different calls, so you can follow whichever one you want. But Shrikant, I'm not going to come to you BEL because you gave your thesis on BEL. What I'm going to come to you is on Astral. Now, PVC prices have started inching up. I know Parag Thakkar has given a fundamental call there some time back. My question to you is this recovery that we saw the last 2 days smacking off a trade here, or you would avoid it?
I think it is better to avoid because it has been consolidating since last almost 6-7 months. It is not crossing the level of 1575. It is not breaking the level of 1350. Overall activity is completely range bound. So it is better to stay away because I don't think that it is going to do anything in the near term. But yes, if there is any specific activity, then we should look for accordingly. But otherwise, at current levels, it is better to stay away.
Better to stay away. All right, on Astral. From the large caps, I wonder. So there's Larsen and Toubro, and I wonder, Shrikant, what the view is for you on the charts. At now, in the pre-open rate settling at 3860, would you buy into this?
Yeah, absolutely. Yesterday also, in fact, it was very close to its key support levels. It was below the levels of 3750 for a considerable time. And after hitting the level of 4100, 4150, when the stock has corrected from its high, again, it started taking support close to those levels. So clearly indicates that the stock is above its crucial levels, above its fulcrum level. And again, the stock can rebound minimum up to 4,100, 4,050. So at this level, certainly it's a buy. Risk reward ratio is quite favorable.
Shrikant, just the name, not the rationale. Your top pick for the day today. We have 10 seconds.
So for the day, I would like to go with Reliance Industries.
Okay, Shrikant, I'm going to come back to you. But Reliance is Shrikant Chauhan's top idea. We'll take in Kush Bora's top call, maybe post-market open. But here's how the markets are starting off today. Remember, the pre-open was deceptively lower. We're starting off flat. Now let's wait and watch if this actually succumbs to some bit of selling or no, because the Nifty 50 is now a 0.25% lower. So about those 50-60 points lower. So not quite deceptive, if you will, really. But let's wait and watch if this recovers as well also or no. The market breadth is constructive on a flat day for the mid-cap index. The advanced decline ratio is higher. Small caps marginally in the green. Okay. In some sense, you would argue a flattish start, maybe a bit of a negative bias. The currency has also come off a little bit, but it's not all that bad as yet. Now though, 1/3%, now around 90 odd points. Let's see if this gets recouped. Let's get the heat map up on the screen. See what's putting pressure on the indices. A lot of red, very little green, by the way. Let's start with the red. Maruti yet again. I wonder if that South African news is really plaguing Maruti. third day on a trot now. You've had some bit of a rough start for Maruti Suzuki. Dr. Reddy's down. SBI Life is looking soft. Asian Paints is looking soft. And is Indigo and M&M. So if there is one index which has decisively come under a bit of a shade, it is autos. It was the prime index moving higher. It is now the index which is not quite making those moves on the high. So even if you have bets on the auto index, be careful there. On the gaining side, Larsen and Toubro 3% higher. Really strong show. People have liked the numbers. 3.2% higher. Hindalco yet again 1.3%. A bit of a gain for ONGC. I would reckon Oil India could be doing the same as well because of higher oil prices. And then the steel pack, JSW Steel, Tata Steel, and from the metal index, Coal India up about 0.33%. So I think that's the long and short. L&T on the gaining side, but autos clearly in the wrong lane right now.
Autos flailing. L&T is not enough really to pull the markets together, because if you look at Nifty contributors, you have much more red than green coming in. On the dragging side, and not standing out, but take a look at it, the private banks are not doing too well, and of course banks and autos completely sitting this one out. Meanwhile, metals are doing relatively okay, and I suspect when we pull up the sectoral heat map, that's what you will see as well. Let's pull up the small cap and the mid cap while we're at it. Okay, Nifty metals there completely dominating relatively, 1% up. Energy stocks are doing fine. Auto there in the slow lane. IT stocks also flailing. Nothing great happening there either. Fed was a non-starter one way or the other, because anyway, this is maybe Powell's lame duck phase. I want to pull up the small cap and the mid cap individually as well. Small cap actually not doing too badly, nor is the mid cap in relative terms flat. And the small cap 50 about 0.25% up, so relatively doing okay. VIX is also okay, quite benign after that huge spike up, about 2% up right now at the 13-14 mark. All right, specific stocks. Let's take a look at what's happening there. Results. Gland. Let's look at Gland Pharma. Its subsidiary actually has broken even, and that's what has got the street excited. That's about 8% up, one of the top gainers. Garden Reach 4% up. Vodafone Idea 1% up. And the fact that promoters are backing it, as per the management, maybe is giving it some impetus. SBI Life, Birla Soft, L&T. Let's look at some of those and what's happening with their results. SBI Life actually looked pretty decent. Birla Soft was good. L&T, of course, is the star attraction there. Pine Labs, RVNL. Let's look at them. GE Vernova, another one which is buzzing today in trade. So all of those looking good. Some mid-cap companies have reported well, and that is one relief for the market. Hinzinc, MCX, you have commodity prices popping. Are they also benefiting these stocks? Nothing much. Hinzinc is now cooling off. MCX about 2.5% up, but could be more than one reason for that happening. Nomura has hiked the target price on car trade. Let's see what's happening with car trade. It was our big brokerage call of the morning. That's about 2% up. So you're seeing some movers there, but overall a very cautious market. Hindustan Copper, of course, seeing that rally sustaining as well, 7.5% up at this point. Alex, I think more weak stories than positive ones though today.
Yeah, indeed. But there are the ones that are doing well are doing particularly well. You pointed out Hind Copper at the end. It is one of the top gainers. Apart from Gland Pharma from the broader markets, it's leading the metal pack ahead as well. And most metal stocks gaining in trade today. What else is working? Valor Estate is up and about as much as 6%. And from the real estate pack, of course, something that you should keep an eye on. You've got Birla Soft that is up and about, reacting to earnings again, 4% higher or thereabouts. V-Guard is doing reasonably well. Hitachi Energy is up and about, 3.8%. GVTND building on those gains and holding on, 5.5% at this point. Among the losers, actually the big losses are capped. Maruti Suzuki, one of the big losers, down about 3%. What else is losing ground? Something like a Sagility India, Craftsman Auto, 5-star, reacting to numbers, down about 2%. Dr. Agarwal's Healthcare, down about 2% or so. M&M Finance also reacting to numbers, down about 2% or thereabouts. Motilal Oswal, perhaps a little bit of profit-taking, kicking start here. Asian Paints once again losing ground, and the big disappointment really on the earnings. So two large cap companies seemingly in the very recent past reacting very sharply on the downside to numbers. Parag bhai, if it stands out, right? So Maruti Suzuki, which you've kind of already pointed out, and Asian Paints has gotten clobbered after those numbers.
Correct.
For people who have held these as portfolio stocks, Maruti Suzuki, of course, at some point will bounce back. This is the market leader. But Asian Paints, market leader, several things working in its favor. Why does it not do better?
So first of all, let me say that by God's grace, luckily I have sold both Asian Paints and Maruti at higher levels. Sometimes we get lucky, and these are great companies, right? So it was a difficult decision to sell.
You get more lucky than unlucky. Something I would.
Let's hope what you are saying is right. So I would say that see, Maruti, of course, as I said, no, even after adjusting for labor code thing, the margins were a little bit compressed, and even after there was a big operating leverage, right? The volume growth was there. So the expectation of margin was not so bad.
Could it be because of mix?
Small cars selling more, plus commodity headwinds have come. Sure. See, steel prices have gone up and they have just started to go up. Sure. So even in future, some of the auto OEMs might see the margin pressure. That is my worry even for M&M, even though that I hold, although reduced rate, but that I hold. But that is a worry in my mind that auto OEMs will have a margin pressure if they don't increase prices. Right, and they don't want to upset the volume, which is volume uplift, which has started happening after GST. So they don't want to upset the customers, so they will not take a price hike, which I think Maruti has said. And steel prices are going up. So that is a
Q4 is also expected to be
so something which I will start worrying about auto OEMs in that particular thing.
And what about Asian Paints?
So Asian Paints, again, see, crude oil has gone up because of this Iran tension. Plus, there is intense competition, as Asian Paints itself has highlighted. Birla Opus is again bouncing back. So we'll have to see. But at a price, I would like to buy Asian Paints.
Okay.
I'll just go to Shrikant very quickly.
On Reliance Industries, he had said, actually.
Yeah, you talked about Reliance Industries, Shrikant, and you top call after opening.
After opening, what I'm saying is there is good amount of buying interest in all steel stocks. Jindal Steel and Power, Tata Steel, JSW Steel, all are doing well. And the best part is that most of these stocks, I'm to say the stock from this particular basket have broken their important resistance level after a very long time. So at current levels, JSW Steel looks good, which is currently around 1228, 1229. There I am seeing the next levels of at least 1255, 1260. Here we can keep a stop loss around 1210 for buying JSW Steel.
Gainer on the Nifty 500 is now Hindustan Copper. As much as people are circumspect about the rally, this whole conversation around impending copper shortage, remember, it's fraught with risk. One decision from the US and that will change very, very quickly. Kushbora, we have 30 seconds. Hindustan Copper or your top call for the morning?
Hindustan Copper book profit. Jindal Steel was a call that we discussed yesterday. An update today for 1140. That also you could continue to hold with a trailing stop loss. Bump it up to 1125 now. And now you can still consider Kirloskar Pneumatic. Not a big bang opening, but a positive one at that. So you can consider as a fresh trade.
Kirloskar. Okay, keep an eye out for that. Okay, gentlemen, all three of you, thank you so much for taking the time out and being with us. Really appreciate your time. A rewarding wedding and festive season put a spring in Metro Brands Q3. Delivered a strong quarter with beat on all line items. What's the outlook ahead? I think before we get in the management and Nissan Joseph Johnson in a moment from now, we get in Mahima to give us a lowdown on the Q3 performance. Mahima.
Right, so Neeraj, like you rightly mentioned, it's been an all-round beat after quite some time for Metro Brands this quarter, and growth was largely led by a strong wedding demand, festive season, as well as benefit of GST, reduction reaping in now this quarter completely. Margins have also improved. They've largely maintained their guidance, and they've also launched something called Metro Active. Overall revenue growth stood at 15% and net profit growth at 35%. Sales per square feet still was flat this quarter, but share from premium category rose to 55%. Overall, in terms of store growth and rationalization, they remain focused on profitable stores. They've guided for normal closure of 2 to 3% of retail stores which are not working for them. The management has also said that Foot Locker openings are being delayed due to BIS related issues. So all of these combined together, guidance has been maintained. So overall a good quarter, but whether this double-digit growth is sustainable or not is the right question to ask management.
Well, a lot of right questions to ask Mr. Nissan Joseph. Mahima, thanks for that. Let's get him in. He's the CEO of Metro Brands. And, The board has reappointed him in that same position for the next 5 years. So there is stability at the helm of affairs at Metro Brands. So good for the company, and congratulations to you as well, Mr. Joseph. But thanks so much for joining in. This is Neeraj here. Good morning.
Good morning, Neeraj. Thank you. And it's been a wonderful 5 years so far. And I'm very grateful and honored to work with the team at Metro Brands. And I look forward to the next 5.
Yeah, as I'm sure your investors do, because I think the delivery, I mean, a quarter here and there notwithstanding, there is a bit of a steady performance that has come in, right, in the recent past as well, or maybe through the whole duration of the last 5 years. But let's talk about the quarter 3. Very good. Decent revenue performance. Would you have hoped for more given that the GST cuts came in, or do you believe it's an ongoing process? And what is the outlook for quarter 4 as well?
All right. So I think, just to recap and summarize, we've had 3 quarters of double-digit growth, and each of those quarters have been consecutively better than the previous quarter before that. I think for the year, we're now at 12% growth, last quarter being at 15%. That's exciting for us. The other part that's really exciting for us, Neeraj, is that we are maintaining our profits, right? So we're not buying sales at the cost of profitability. And we've also maintained profits despite an increased investment in new stores, specifically the Foot Locker and Metro Active chain, despite our increased investments in marketing. So it's not like we're going into a whole lot of cost cutting and trying to hunker down to make the profitability. There are a lot of good signals happening in us. The other thing I was excited about the quarter is that we saw all our banners grow. So it wasn't just driven by growth in 1 or 2 banners. We have multiple banners of Metro, Mochi, and Walkway, and Crocs, and FitFlop, and all of the banners posted growth over the last year. So that was exciting to see too. And, as noted by the person before me, I do want to point out that our sales per square foot, the way we calculate it, if I opened a store on December 31st, for example, last quarter, that square footage is counted as being open for the entire year, but the sales aren't. So very often you're not going to see square footage growth, especially when we get to opening new stores. Once we stop opening stores, which will be hopefully a long way away in the future, then you'll start seeing a more true picture of a true comparable per square foot sales growth.
Mr. Joseph, okay, so that was very interesting. We're also trying to understand what the implications of the consumption pushes from the government were. And there was an expectation that sub 2,500 category might get a leg up, forgive the pun. But would you say that panned out? Or would you say that it's primarily festive driven or wedding driven sales that have bolstered your numbers in the third quarter?
Yeah, I think, depending on the banner, right? I think it had a good impact on us in our Walkway banner, where, 90% of the goods saw a GST reduction. Metro and Mochi, it's about 40% of the goods are under that price point. Did we see a bump on that? Yes, but you also got to understand this is not the price of an automobile, right? So the delta of 3 or 4% or 7% is not significant enough to spur a lot of growth. I think it's the other initiatives that the government has been doing over a period of time, with the tax laws and a lot of other benefits that they've been providing. That I think is having a better effect, right? So, we also had a headwind that I don't want to make big deal out of, but Pujo fell a lot into Q2. So despite that, we were able to grow in Q3. So there's a lot of good indications that it's multiple banners that are firing, it's multiple price points that are firing for us. So we're not riding on one single, GST benefit or one single premiumization story. Thankfully, we have a great stable of banners that we can cater to multiple consumers and for their multiple needs for their footwear wardrobe.
Okay, Mr. Joseph, I want to add into the congratulations on the extension, and excited about what's happening. Just want to get your sense from an outlook right now on same store sales growth, and are you expecting this GST momentum to continue?
Yeah, so, from where we sit, we're not seeing any indications that there's going to be the lumpiness that we had post-COVID. There were some very lumpy times. We also had some significant offsets and, we had elections and we had monsoons and all of those things, Some of those things are still going to factor in that might create a little bit of lumpiness, but there are no significant lumpy factors that we see in our future rollout. One of the reasons we've continued to guide somewhere north of 15% is we have a lot of initiatives in place right right now, a lot of investments in place right now. So we want to ensure that none of them drag into our profitability. And, we're going to grow as fast as we can in terms of new stores. We're going to make sure that our stores remain profitable. But looking forward, January had 0 wedding dates this year, whereas last year it had I believe it had 13 wedding dates last year. Despite that, December and January are holding up well. So we feel pretty confident that, this should be an indication that we should be headed in the right direction.
Just a couple of things very quickly. Your Foot Locker store openings had been delayed. Is that now on track? Any outlook you can add there?
Yeah, I wouldn't say the word is delayed, Tamanna. The word I would use is, we're being a little bit more cautious on it, right? So it's not like we're not opening Foot Locker stores. We've opened 4 Foot Locker stores in the last quarter. So this was much after the BIS impact hit us, and we were fully aware of it. What we'd like to see so we can get aggressive growth going in our Foot Locker stores is confirmation from all the different brands that they've been able to tackle the BIS challenges that they faced in multiple ways. There's multiple ways to tackle that challenge. All of them require time. All of them require some planning, some investments and effort. Once we have that assurance from brands that they can deliver, I think you'll see us get back to aggressive growth. Right now, we're just being a little cautious. We haven't put it on pause.
One last question, and it would be, since it's the season ahead of the budget, I must ask you, what are you hoping for from the budget? The last budget gave tax relief. We've seen a boost for consumption the year round. Are you expecting more? What would you like to see?
Yeah, I think it was great what the government did for the footwear industry to bring it more in line with apparel when it comes to the GST rate. I think we just want parity. We want parity to be able to compete, whether that includes BIS, that includes GST laws or tax laws. We just want it to be something that we can compete with against not only our individual companies at home, but also international companies trying to do business in India. We also want to be able to, grow the businesses so there's multiple segments of the economy benefiting as opposed to just maybe one segment of the economy. So I think there's multiple ways to do it, but we're very thankful for at least bringing us in line on the GST with apparel for the first time in a long time.
Mr. Joseph, as always, a pleasure speaking with you. Thanks so much for taking the time. Wish you all the best in the next stint as well.
Thank you.
All right, let's talk about Datamatics Global. And this company, of course, posted its Q3 numbers. It's been a strong quarter for them with healthy revenue growth and improvement in operating margins as well. There's, of course, that impact on account of the labor code. But let's talk about some of those numbers. Revenue increase of close to 20% at 510 crore rupees, EBIT standing at 75 crore rupees or very close to that mark. Margin is improved quite considerably versus the comparable period. It's about 400 basis points or thereabouts, and the net profit on account of that impact of the labor code has declined, come in at 36.4 crore rupees, that exceptional item of 40 crore rupees coming through in the quarter gone by. We're joined by the management and specifically the Vice Chairman and Chief Executive Officer, Rahul Kanodia. Rahul, thanks so much for taking the time and for speaking to NDTV Profit. Absolute pleasure speaking with you. Help us understand that revenue figure, because I think a lot of people looking at that very closely. 20% looks robust. What has led to that?
I think it's a combination of a couple of things. First, there's been genuinely organic growth and healthy organic growth. Second is the acquisition that we made of a subsidiary called TNQ. And third has been some benefit of the exchange rate. So it's a combination of these things, but net, the organic growth has contributed very meaningfully for the revenue growth.
Okay. Specifically on the revenue front, though, I'm just wondering, and this is something that I think a lot of your investors, a lot of people watching this will wonder about, which is what is the share of AI in revenues and the medium-term outlook for that leg of the business?
So we've done about 65 odd projects in AI. It's hard to define a share of AI specifically because AI is getting integrated into pretty much every project. And therefore, it does not stand out as an AI project in itself. But yes, pure AI projects, we've done about 65. And then there's AI scattered around and sprinkled into every project that we can.
So, Mr. Kanodia, good morning, Tamanna here. Just taking that AI story forward, because this has been the question. How do you tabulate, or how do you actually calculate what an AI project is? Is it the sprinkle on top? Because it's going to be in the base of pretty much everything that you do. Should you look at it from such a wide aperture or a narrower lens? How are you looking at AI revenues, and at some point would you want to report them as standalone?
So some of the projects are core AI, where it's fundamentally an AI-driven project. That's how we define AI. Then there's a sprinkling of projects all over, and in the existing projects, you do have some components of AI coming in. That technically is AI, but it's hard to therefore define what is the AI revenue or not. So what we are talking about is core AI, which is a project essentially designed on the base of AI.
On your core numbers, just want to clarify, the PAT drop is because of the labor code charges?
Yes, that's correct.
Okay. And why do you think this is going to have a broader impact? And I know every company has done this. Is this a one-time thing? Do you see any broader impact of labor code charges over time?
No, it is a one-time thing. On a recurring basis, it'll get merged into the quarterly employee cost, because this is a gratuity component. So this was a one-time because it had historical recalculation. And now that that's done, going forward incrementally, it'll be very minimal.
Mr. Kanodia, good morning, Neeraj here. And just trying to get a picture, since we are at the start of 2026, of the slightly longer time frame, when one looks at what you've done in the last 3 or 4 years, right, as a company, not only has there been steady top-line growth, but your operational metrics have improved year after year. I believe the trailing 12-month number on the operational metrics would be the highest in the longest time. Is this the new normal, or do you improve upon this? And is there a sense of what that number could be, let's say, 12 to 24 months down the line?
So there will be further improvement as we continue our cost control, as we continue our growth initiatives. There will be some uncertainty generally because of the economic situation globally. The US still is uncertain, Europe is looking better. But nevertheless, and also the advent of AI could be disruptive. But net, we are seeing a huge opportunity for us to leverage these technologies to provide transformational services to our customers. So net, I'm looking at a very healthy next 2-3 years. And therefore also on the profit.
Okay, and forgive me for not knowing this, but if you had given a guidance for FY26, are you on track to meet that or improve upon that?
So right now we are on track, and I think next year looks a little better than this year.
I mean, a little is how little, is it?
So no, yeah. So we I think are looking at a high single-digit organic growth. Plus, if there's anything inorganic, then we look at that.
On the annual, anything inorganic? I mean, you might not be able to predict, but are there conversations going on? Is my question.
There are conversations going on, not matured yet, where we are in a serious state. But yes, there are conversations going on.
Okay, I do want to ask about ROE, ROCE.
Yes.
And this is, of course, when you look at the last 4 years, there has been a little bit of a decline. And I'm wondering whether a bottom has been found and what the trajectory will likely be going forward.
So the ROC has also got to do with the current funds. But as we consume the funds, we are at about 14-15%. As we consume the funds in the acquisitions or certain capital expenses that we have planned, then obviously then you'll have a different ROC coming up. So ROC should improve as we consume the funds for growth.
Mr. Kanodia, I want to understand about the banking segment. And for you in particular, this is domestic focused. It accounts for close to 20% of your revenue.
Yes.
What are the trajectories here? It is your fastest growing segment for most IT companies. But I think that's from the perspective of looking outside of India. So what are your expectations?
So the banking and insurance, that BFSI segment is very ripe with digital transformation and AI-based transformation particularly. So we've got some very interesting projects going. We are doing that in India right now. And the agenda is to take those solutions to the international market. So our focus will be taking these new AI solutions into the international market once they've stabilized in India. And here we've got some live interesting projects already started. So that's the strategy. Those companies are very open to the idea because they are very heavy with information processing, and that's where AI fits. So they are very open to the idea of using these technologies for changing and transforming their business operations.
Mr. Kanodia, I think EdTech, if I'm not mistaken, is one of your big drivers. Are you seeing a lot of AI integration there? What is the outlook for EdTech? And, can you give us a segmental guidance split as well? I think BFSI and largely domestic has also done well.
So, BFSI domestic has done well. EdTech is a little slow on adopting these technologies, essentially because we are targeting the education publishing segment, and they are a little sensitive to IP and intellectual property violations. So there's some fear that AI could violate IP rights of the authors, and that's why they're a little hesitant. But that's a very rife and potent segment to adopt AI because there's a lot of content. So I think it's a matter of time where the customers come around saying, okay, you're not violating author's IP, and they'll be okay with adopting this technology.
Okay, thank you so much, Rahul Kanodia, for speaking with us. That's the Vice Chairman and CEO of Datamatics first on NDTV Profit. Meanwhile, markets are looking like they are worse for the wear. The Nifty close to the low point of the day, about 0.5% down at this point. Nifty IT is where the pain point is. Just pull up the Nifty IT, about 1.5% down, and then its internals as well. That's where the shock and awe really is, and you're seeing that drag coming in on the Nifty IT. Let's pull up those constituents if we can on the Nifty IT, and Persistent Systems there. Worst hit, about 3% down. Emphasis, TCS, all of them. I don't know if this is a mix of nothing really moving on, interest rates, if it's geopolitical fears, if it's immigration crackdown in the US or what it is. But you overall have quite a dull move on Nifty IT. Metal stocks, meanwhile, are the only ones which are giving some relief.
Yeah, you bet. I mean, today is that kind of a morning wherein we're seeing a bit of a, it's a slightly tough one. But the point will be, I mean, and look at what, Hindustan Copper is on steroids right now. But we are, 120 points lower. I wonder if this changes during the course of the day, the way yesterday's market changed. And you got to keep that in mind, that banks are actually doing reasonably okay. The heaviest weightage on the index is down just 0.22%. On the market is down just 0.22%. So bear that in mind. Volatility, 13.7, marginally higher, but nothing too dramatic. But Hindustan Copper, oh my God, that stock, another 10% higher. It's one fraught with risk, but for now, it is rewarding the people who are taking that risk and piling on to that stock. And a clutch of others like Gland, Oil India, GVT&D, etc. doing well. But moving on to the next conversation, and it's budget time, you can't not do with a conversation around capex, railways, rail systems, and more. And there are other reasons, of course, to talk to Titagarh Rail Systems always. They've signed a deal with ABB for a driverless metro project as well. Before we get in, Umesh Chaudhary of Titagarh Rail Systems to discuss what's next in store for the company and the budget expectations. Let's first get in Varsha to set this conversation up for us. Varsha.
Well, let me start with the deal agreement with ABB that Titagarh has signed. They've signed agreement with ABB India for driverless metro projects, which builds in strategic alliance announced in November 2023. And ABB will support design, manufacture, and do commissioning, and also transfer of technology for TCMS for 25 AC metros. Now, talking about the strategic importance of this deal for Titagarh, this completes their TCMS portfolio and this enables backward integration across the metro value chain and positions Titagarh as a comprehensive rolling stock manufacturer. On to the second reason why Titagarh is in focus is, of course, the key budget expectations. The expectations are centered on higher capex, faster execution, and deeper private sector participation. And the incremental budget allocation is after 3 years of muted growth. The spending mix is likely to shift towards capacity augmentation, and the project announcements which are key to watch is additional dedicated freight corridor with long gestation timelines and high-speed rail corridor expectations, and of course continued rollout and scaling up of Vande Bharat trains. So these are two reasons why Titagarh is in focus as of today.
I'm going to start with focus number one. Thank you for that, Varsha. Umesh Chaudhary, Vice Chairman and MD of Titagarh Rail Systems, is speaking with us. And Of course, we will be having that budget conversation as well, Umesh. But first, let me begin with this agreement with ABB India for a driverless metro project. It sounds very exciting. What is it about? What's the size of the project? What are the details you can share?
Yeah, good morning. It is a very interesting project for us because you see what we did since the time we entered into this segment of metro coaches, we've tried to ensure that we capture the entire value chain. And when we started making the first aluminium metro for Pune, we were primarily doing the assembly. Then we went into the stainless steel with Bangalore. The one that we are doing with Gujarat, there we took over the TCMS for a 750 volt DC metro coach, but we did not have the transfer of technology or transfer of manufacturing for the traction motor and the propulsion system or the traction converters. This one, in turn, we have been able to take another big step forward to get some of these key components partially to be transferred to our manufacturing facilities in Calcutta, and also get the complete transfer of technology and know-how for the 25 kVA AC TCMS, which is like the brain and the nervous system of the train as such. So basically, block by block, what we are trying to ensure is that we have a complete hold over the value chain of both the type of metro systems that operate in India, which is the 750 volt DC and the 25 kVA AC.
Well, what does this do for the company in terms of your position, Mr. Chaudhary, once you have this transfer of technology, and what is the capex or the outlay that you have to make?
So we already have invested in the facilities. So we already have our traction motor and traction converter production facility, what we already also gave out in our press release. And what we will be doing is we will be adding on, we are doing the traction motor for locomotives and for EMUs. We'll be adding on to the product portfolio by doing the traction motors eventually for the metro coaches, which is a higher end of the technology or higher end of the spectrum. So it effectively what it does, it completes our product portfolio. And as I said, it kind of gets us a strong hold on the entire value chain of the metro business.
Mr. Chaudhary, good morning. Alex here. And we're just a couple of days away. Now we're counting the hours from the presentation of the budget. And of course, some of us are old enough to have seen a rail budget presented separately that's piled into the same one. And there's no complaining about that.
Fairly recently, Alex. You're definitely old enough.
We watched quite a few of the rail budgets. But having said that, there's a lot of expectations, Mr. Chaudhary, heading into this next budget. And stocks have reacted, not just in the railways pack, but also in the defense pack. And these are two areas that the government is expected to focus on. What are your own expectations and what are you building in towards?
See, as far as our expectations out of the budget is nothing different from what we have been expecting and what we have actually been seeing in the last few years. Capex has been a focus of the government. Infrastructure has been a focus of the government. And we believe that this is likely to continue because the vision of the Honorable Prime Minister is extremely clear about, on one hand, making India into a developed country, Viksit Bharat of 2047, and on the other hand, to continue to support the Make in India and the Atmanirbhar Bharat policy. So basically, if you dovetail the two of them together, what it does is that on one side, there is the market opportunity, and the other side, Indian companies like ourselves have a great foothold in them because they have to be produced in India by hopefully Indian companies. So as far as the budget is concerned, the expectations are very bullish. We are very, very hopeful. And I would say, I would even stretch to saying that we are confident that the focus on infrastructure will continue. Having said that, we must understand on the railway side of the budget, the budget can actually be divided into two parts, the capacity creation budget and the capacity utilization budget, while both are capex. So when the track is constructed, that takes away bulk of the money. And that is not something that happens year after year. But the procurement of the rolling stock, things that we do, is something that will continue for the life cycle of the track, which may be 100 years or maybe more than 100 years. So what is important is not only the quantum of the budget, but the inter-se allocation of the budget. And while the inter-se allocation of the budget in our segment might be smaller compared to the overall budget, it is definitely something which is going to be a longer one or a long-lasting one.
Just a follow-up to that, and talking about the life cycle of some of these projects, therefore, on the rolling stock, right? So, Mr. Chaudhary, heading into the next couple of financial years, or even the next 2 or 3 financial years, would you say that there's a sizable chunk that you might get from replacement orders, and how do you look at that as an opportunity?
See, the Indian Railways on a thumb rule basis, on a back of the envelope basis, has about 3.5-4 lakh wagons. And I'm talking about our freight business right now. And the average wagon size age is about 25 to 30 years. So then, therefore, every year there will have to be replacements. And the replacements have been actually much more back-ended in the sense that we've not had many replacements in the last few years, because the wagons were added in the last earlier part of this life cycle, apart from the last 2-3 years that the railways have really pumped up the wagon induction. So we do believe that there will be replacement demand that will be there in the wagons, but also we believe that there will be the growth demand, because you see, India is well on its way to become third largest economy in the world, or a $5 trillion economy. And in order to be competitive, in order to do that, we have to be competitive. And in order to be competitive, we have to move the logistic cost as a percentage of the GDP lower. So, all of this put together effectively says that the target that the railways have set for themselves of carrying 3 billion tons of traffic by 2030 is a must-have for the country. And in order to do that, they will require a lot of more wagons. So, there may be a few months of delay or here and there as far as the procurement is concerned, but the underlying solidness of this demand or of this market remains intact.
Umesh, hi, good morning, Neeraj here. And I'm wishing you good morning with an empty glass, by the way. But just a point, since we have warm borders right now, and if the incremental part of the capex allocation goes towards defense, could it mean that it could be a budget that could not have large allocations for other capex requirements, including railways? Is that a distinct possibility?
I don't see, Dheeraj, that as a possibility, distinct possibility. I believe that the overall capex is going to be sizable. I, in fact, believe, I hope that the capex allocation to the railways will be even higher than what we've seen in the last years, which in itself, the base is so much higher. If you really compare it over the last 10 years or 15 years, we've seen a dramatic shift in the way the capex allocation for the railways has been. So I believe that there exists all underlying reasons for the capex allocation to be larger. But I would also like to add a few things which we are hoping, which we hope that we will see in the budget. We hope that there will be more dedicated freight corridors. We hope there will be more high-speed corridors, because these are very long-term projects, but they will really build the foundation for the India of the future. So, so to answer it in one word, I don't think that there should be any cut on the capex.
Right. Umesh, thanks so much for taking the time. Pleasure speaking with you as always. And I hope that your expectations actually come to pass when the finance minister presents the budget. Fingers crossed. All right. Well, in the run-up to budget 2026, we've got new ground reports from across the country, and this is one of them. Gems and jewelry, alongside tourism, form the backbone of Jaipur's economy and remain the city's biggest source of foreign exchange. But with the US hiking tariffs, the industry is beginning to feel the tremors. As part of NDTV Profit's budget for Bharat 360-degree coverage, my colleague Harsha Kumari had this ground check on how the Jaipur gems and jewelry industry is affected and what it wants from Budget 2026. Take a look.
cornerstone of Jaipur's economy. We are here at the famous Johari Bazaar outside Devri Ji Ka Mandir. And this street is famous for its trade in gems and jewelry. In fact, gems and jewelry is the second largest revenue earner for the state, along with tourism. In fact, perhaps the largest till the Trump tariff set in. Now the market is volatile. What do people here engaged in the gems and jewelry trade really want? आप क्या कर रहे हैं? ये क्या लेके आए हैं?
हम माल देख रहे हैं सेमी
क्या है ये?
एमराल्ड।
अच्छा,
एमराल्ड स्टोन।
तो यहाँ पर क्या होता है?
यहाँ पर माल की सेलिंग परचेजिंग होती है। मजदूर तबके के लोग आते हैं यहाँ पर काम करने, और हम लोग यहाँ पर से माल खरीदते बेचते हैं, और हम ब्रोकर हैं। हम माल बेचते हैं आगे व्यापारी को। पहले तो माल बेचते थे, खरीदते थे व्यापारी, तो
लेकिन अभी हम देख रहे हैं कि जब से अमेरिका में अस्थिरता आई है, ट्रम्प टैरिफ्स आ गए हैं, तो जयपुर का जो एक्सपोर्ट है वो बिल्कुल उससे इफेक्ट हो गया है। तो क्या असर पड़ा है?
बहुत असर पड़ा। 50% टैरिफ लगा दिया ट्रम्प ने। उससे बहुत ज़्यादा मनमानी कर रखी टैरिफ से ट्रम्प ने। उसने हमारा पूरा मार्केट डाउन कर दिया। हम व्यापारी के पास माल लेकर के जाते हैं तो वो कहते हैं 5000 का माल हम बेचते हैं उनको, तो वो कहते हैं 2500 रुपीज़ तो टैक्स में जा रहा है हमारा। हम कैसे माल खरीदें आपसे?
तो एक्सपोर्ट कम हुआ है, आप देख रहे हैं?
कम हो गया अभी, कम हो गया, बहुत कम हो गया।
तो आपके व्यवसाय पर कितना असर पड़ा है?
बहुत असर पड़ गया हमारे व्यवसाय से, बहुत ज़्यादा असर पड़ गया। अब हम इससे बहुत लॉस में आ रहे हैं अभी।
देखिए, अब थोड़ी देर में बजट आने वाला है, तो आम आदमी क्या चाहता है? व्हाट डज द कॉमन मैन वांट? क्योंकि आप लोग का जो व्यवसाय है पूरी तरह से एक्सपोर्ट पे निर्भर था, बहुत बड़ा हिस्सा। दैट अबाउट 30% ऑफ जयपुर्स एक्सपोर्ट इज टू द यूएस। एक्चुअली यूएस वाज अ वेरी बिग मार्केट। सो अब आप ये जैसे ये कह रहे हैं कि आपसे कोई माल ही नहीं खरीद रहा है, तो आप क्या चाहते हैं फाइनेंस मिनिस्टर से?
इसके लिए गवर्नमेंट को सोचना चाहिए हमारे बारे में कि मतलब कुछ लोगों की जो दिनचर्या जुड़ी हुई है इस चीज़ से, और काम करने का जो प्रोसेस है वो स्लो डाउन हो गया है, तो गवर्नमेंट का इस तरफ फोकस नहीं है।
I am in the Jain Jewelers showroom. It's the Khandaka family which have been in the trade for generations. And the 5th generation is right here in front of me, Kamal Khandaka ji. Kamal ji, the market is very volatile. You know, I can understand that Indians are still buying, but otherwise if you look at Jaipur's jewelry trade, and Jaipur's jewelry trade is the cornerstone of the economy, it is volatile. Outside also you find there are not as many people selling. Exports have come down. So what is the outlook and what do you want from the finance minister?
देखिए मैम, मैं आपको एक निवेदन करूं, गोल्ड की रेटें बहुत स्पीड से बढ़ रही है। अराउंड 50 to 60% साल भर के अंदर बढ़ गया है। चांदी भी बहुत बढ़ रही है, और जयपुर जो है स्टोन्स के लिए माना जाता है, और इधर हर तरीके के 5000 6000 तरीके के स्टोन, सेमी प्रीशियस, प्रीशियस, सब तरह की कटिंग होती है। जैसे सूरत जो है डायमंड के लिए जाना जाता है, वैसे जो जयपुर है वो कलर स्टोन कैपिटल ऑफ द वर्ल्ड है। तो यहाँ सब तरीके के स्टोन्स बनते हैं, और फिर वो अलग अलग जगह जाते हैं, पूरे विश्व में जाते हैं। और हमारे यहाँ जैसे आप जानते हैं सीतापुरा है, वहाँ भी बड़ी बड़ी फैक्ट्रियाँ हैं जो एक्सपोर्ट का काम करती हैं साहब, और वो स्टोन्स को यूज़ करती हैं, उसकी ज्वेलरी बना करके एक्सपोर्ट करती हैं। जनरली अमेरिका हो गया और बहुत सारे वर्ल्ड के अलग अलग देशों में करती हैं, और उसके हिसाब से बिजनेस चलता है। अभी स्टोन का मार्केट थोड़ा सा डाउन इसलिए चल रहा है, एक तो सिल्वर बहुत तेज हो गई है। आप देखिए, जो सिल्वर साल भर पहले 70-80 हज़ार रुपये हो रही थी, वो आज के टाइम पे 3 लाख रुपए बन गई है। तो एकदम से 3 गुना तेजी आना एक बहुत बड़ी ड्रास्टिक चेंज है। उसकी वजह से जो इंडस्ट्रियाँ हैं वो थोड़ा सा प्रोडक्शन उन्होंने वीक कर दिया, और जो स्टोन्स वाले हैं वो भी अपना प्रोडक्शन वीक कर दिया, उन्होंने कम कर दिया अपना प्रोडक्शन करना, क्योंकि उसकी खपत कम हो रही है। और दूसरा जो ट्रम्प ने टैरिफ और ये सब चीज़ें लग रही है, उसकी वजह से भी देखिए मार्केट को बड़ा डीमोरलाइज्ड हो रहा है मार्केट। तो जो एक देखिए कारीगर तो पूरे उतना ही है, फैक्ट्री वालों के खर्चे उतना ही है, पर क्योंकि सेलिंग नहीं हो रही तो उसके हिसाब से उनको प्रोडक्शन कम करना पड़ता है, और छटनी भी करनी पड़ेगी आगे जाकर, अगर वो सही टाइम पे सुधार नहीं हुआ। तो हम तो गवर्नमेंट से सबसे पहले निवेदन ये करते हैं कि देखिए जो भी मतभेद हैं, जो भी ड्रास्टिक चेंजेस हो रहे हैं, जो अमेरिका के साथ डिस्प्यूट है, वो सॉल्व करने चाहिए साहब जल्दी से जल्दी, और कुल मिलाकर के सॉल्व करके इस टैरिफ को सही से कर देना चाहिए, जिससे हमारे एक्सपोर्टर्स जो हैं और जो हमारे कारीगर भाई हैं उनको एक ये रहे, प्रोत्साहन रहे कि रेटों की तो मार पड़ी रही है, ऊपर से टैरिफ की मार तो दुगनी मार हो जाएगी साहब। तो मैं तो गवर्नमेंट को निवेदन करता हूँ कि इसको किसी तरह भी सॉल्व करें प्रॉब्लम्स को, और अमेरिका अपना बहुत बड़ा बाजार है, उसको सॉल्व करें। और मैं तो कहता हूँ सभी देशों से अपने जो भी परेशानियाँ हैं या जो भी है उनको बिल्कुल पोलाइटली और सिस्टमेटिकली तरीके से सॉल्व करके अपन उसको आगे बढ़े।
they seem to appeal to the finance minister that something should be done to boost exports, something should be done so that the Indian industry is cushioned against tariffs, and something also should be done to poor people whose livelihood depends on the gemstone industry, the cornerstone of Jaipur's economy.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान,
कुछ अच्छी खबर मिलेगी क्या? How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा।
कब से बोल रहा हूं, कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
Back with India Market Open, and Thyrocare Technologies reported a very strong quarter. Before we get the management, let's get in Varsha to talk about the quarter gone by. Varsha.
Well, the revenue growth that you're seeing is led by 20% growth in the pathology business, and they processed 49.6 million tests, which is up 22%. Onto the pathology, which grew 20% year on year, and franchisee revenue grew 12%, and pathology volumes grew strongly with test count up 22% year on year. Onto the radiology, which over there revenue declined 7% year on year, but year to date, radiology grew marginally at 1%, which includes plus a Pulse high-tech business as well. So overall, yes, a good set of numbers and a strong margin uptake also.
Rahul Guha joins in to talk about the quarter gone by and the quarter ahead. The stock 4.5% lower in trade. Rahul, good morning. Thanks for joining in. Neeraj here. How would you put the quarter into perspective? It seemed strong relative to your peer sets and definitely fairly decent on the margin front.
Hi, good morning, Neeraj. And yes, the performance has been good. Growth continues on a steady clip. Of course, we didn't have Polo and Vimta last year in the base. So, to that extent, the growth rate has moderated a bit from, 22% to 20%, but continuing to grow very strongly our pathology business. What's working for us is our franchisee expansion that continues at a very good clip. And our partnerships business is doing very, very well. It grew at almost 39% year on year this quarter. So I think on the revenue front, we've been doing quite well. I think it's a set of expectations only. While I've been saying that we will hit mid-teens growth, I think given the last few quarters, people are now expecting 20% from Thyrocare on a regular basis, and hence the disappointment in the market. But I'm very happy with how the growth is coming through. The underlying metrics are working well, which is franchisee addition and partnership addition. And I expect, to continue this performance towards the end of the year.
Why do you call it a disappointment, Mr. Guha? Tamanna here. Just curious.
No, I think we've been growing at 20 plus for a while, and people now have come to start to expect more. And I think that's why I would say some folks are disappointed. But I would say I'm very happy with where we are. We continue to sustain 20% growth rate, which is well above the industry. And I can't control expectations, but what I will say is I'm very, very happy with how the strategy is panning out and how the growth rate is coming through.
Do you think radiology is what has dragged that kind of a growth? Though, of course, franchise growth has been very strong. But why that slide in radiology?
Actually, in radiology, we are optimizing for profitability. So centers that are unviable, we've been shutting down. So to that extent, you will see it in the radiology business. While revenue has come down, PAT has almost doubled. So, that's the focus in the radiology business.
And what are your key margin drivers in your view? I mean, you talked about top line growth and the expectations there, but if I look at your margins as well as your bottom line, the numbers look robust. What do you think have been the key drivers?
Look, growth solves everything. When you're growing at 20% plus, your costs don't grow at that level. And so a large part of the margin improvement is mostly coming from operating leverage. And that's what's flowing through into the bottom line.
Okay, Rahul, it might be too soon to ask about FY27 maybe, but I wonder if you believe that what you were envisaging for Q4 is something that is replicable per se for FY27 or FY26 as well, broadly.
Look, at the start of the year, I had guided to mid-teens growth. Of course, over the 9 months, we've beaten that hands down. And I expect Q4 to not be very different from Q3. Maybe a slight moderation there. But you must understand this company has been growing at 20% plus for the last couple of years. So we are sitting now on a very high base, and we've been outperforming the industry for a while. So I would be moderate in my expectations for next year and still maintaining, the mid-teens guidance for FY27 as well. And that's primarily because the base is so high. 3 years consistently, our non-COVID business has grown at 20% plus, while the industry grows at 10%. And competitive intensity continues to be there. So therefore, I'm being cautious about FY27 and saying, maybe we'll land the mid-teens area.
Just trying to understand about the African subsidiary. Are you close to break even now? When do you expect that to happen? And is there a further plan of expanding internationally?
The African subsidiary will break even in about 12 months. It's still loss-making. It's only been a year in Africa. So, we can't expect to turn up profitable in a new country within 1 year. I think 24 months is what we gave it, and we are on track to achieve 24 months break even. It's a small business. I think we are still understanding Africa. So it would be foolhardy right now to press the accelerator and enter more markets until we are sure, the playbook is in place. I think we are now reasonably clear what it takes to win in Africa. I just want to see it flow through to the numbers, and then we will expand as appropriate.
Okay. Okay, Rahul, we wish you all the best for not just Q4, but that growth lasting well into FY27 and beyond. Keep up the good work. Thanks so much for joining in today.
Thank you, Neeraj.
That's Thyrocare with fairly decent numbers, by the way. Just that the Q3 numbers may have been slightly off relative to Q1 and Q2. And maybe that's why they're disappointed, because frankly, when I looked at the numbers, I couldn't find too many faults. But the market clearly doesn't like it. So keep that in mind. Okay, back next 20 minutes of the show as well. We'll probably hear PM Modi speak as well. But we've got a very big market voice, or a very big voice per se, global voice. Geopolitical uncertainties looming around us in 2026. Robert O'Leary, popularly known as Bob, of course, Co-Chief Executive Officer and Portfolio Manager at Oaktree Capital Management, believes that sectoral churn is on the cards, and don't get married to one particular idea and ideology. Listen into a small slice of the conversation that I had with Bob. I would love to understand from you, Bob, as you look at the world from your vantage point, if people in 2024 thought that it was a year of peak volatility, 2025 really came in as a bolt of surprise. And if people thought that 2025, starting from DeepSeek to Russia, Ukraine, to multiple other geopolitical and political events, might be peak of volatility, boy, 2026 has started off on a strong footing too on that note. How do you see the world from your vantage point?
Yeah, we very much agree that volatility has increased over the last several years. I'd go back to a memo that our founder, Howard Marks, wrote back in December of 22, which he entitled Sea Change. And I reference this quite a bit because I think it's very accurate in how it describes the macroeconomic environment. And what that memo says, in essence, is that a lot of the forces that drove sort of unprecedented level of prosperity and financial market sort of health over the last 40 years was starting to come to an end. And really the three forces that drove that were increasing population, globalization, and geopolitical calm. And as we sit today, all three of those forces have been disrupted. Certainly geopolitical calm, we don't have that. You're starting to see deglobalization instead of globalization. And then finally, you're starting to see population be a headwind instead of a tailwind. And the implications for the economy are really quite profound. Those three forces drove unprecedented declines in interest rates and very calm interest rates over that 40-year period of time. And I think what we can expect from here on out is much more volatility. And in fact, since that memo was written, that's exactly what you've seen. You've seen higher and more volatile interest rates, even with central bank rates declining in the last 18 months. Long-term rates have stayed high, and we anticipate that to be the case. So yes, we think the backdrop has become much more volatile, and we expect that to persist.
How does a large institution decide between asset classes and make investment decisions in such volatile times, especially since tariffs are actually adding further fuel to fire, because it's no longer tariffs from the United States to a select band of countries. It now seems to be the world seems to be tariffed by the United States, right? So there are tariff tensions, trade tensions, and of course, as we said, heightened volatility. How do you guys think about investing or make investing decisions in such a scenario?
It's something that we think about on a daily basis. And you're right, tariffs are going up all over the world. That's the surest sign of the deglobalization I referred to just a moment ago. And that will make for higher and more volatile interest rates, which should transfer value from equity holders to creditors in the coming years. We at Oaktree specialize in fixed income, primarily sub-investment grade fixed income. And I think that plays very much to our strengths. So part of the question, or the answer to the question that you asked, is in what we do on a daily basis, which is that we very much focus on the credit side of the equation. Within that, where we do our best work, or where I believe we do our best work, is in dislocations, environments where syndicated markets start to break down, and it requires alternative capital of the form that we have to step in and provide that capital to borrowers. We're starting to see that with increased frequency. There has been, at a surface level, a level of calm and relatively benign market conditions, but if you look below that, it's starting to show some deterioration in terms of credit conditions, and we think that persists and perhaps increases over the course of 2026.
Wow, Bob, sorry, just trying to understand this. Would you believe, or are you trying to say that what will triumph in 2026 and 2027 maybe is fixed capital which is available on tap, fixed income which is available on tap, or could it be opportunistic fixed return capital like private credit, for example, which will be able to make the most of such times?
So I think it depends a little on the path of the economy and of the financial markets. If we see a recession, which I think is entirely possible, there's really only one thing propping up most of the global economy at this point, and it's spending on generative AI. If that were to deteriorate or somehow start to decline, I think you would see a recession. And if there's a recession, we'll have a very significant opportunity in opportunistic credit. If it stays largely where it is, the economy that is, and the financial markets as a resulting matter don't see a major dislocation, I still think the place to really focus is credit. It will be in different forms of credit, more performing credit. To your point, it could be direct lending, where we're going out to approach borrowers on a bilateral basis instead of through the syndicated markets. But again, it depends a bit on the path of the economy from here.
But you do believe that equities, which had a great run, and led by US equities in 2023 and 24, and even if 2025 US equities were not top of the pile, but they certainly did perform. So 3 years of a return, high return generating equity return in the US and some other areas, you reckon equities might not be the asset class of choice in 2026?
It is the collision of two profound, almost tectonic shifts in the global economy. On one side, again, generative AI. And if you look at the outperformance of the equity markets, it's those names that are associated most with generative AI that have seen their currency, their stock go up pretty meaningfully.
That's true.
And on the other side, this volatility that I mentioned a minute ago in interest rates. There's a battle between those two. Again, in the last 2 years, the economy has largely been dictated by the strength of generative AI and the spending associated with that. I think 2026 we could see a reversal there, where you start to see the volatility in the market start to overcome that. As people get worried about the return on that massive amount of spending that's gone into generative AI. And if that happens, I think equities could suffer as a result.
Wow. And Bob, do you reckon that this would, equities at major economies suffering in your terms as a result would mean that equities across the world have a bit of a lame or a lean 2026, or could some markets like India, for example, which have underperformed almost all of 2025, both relatively and absolutely, and have growth up ahead? India could well be one of the fastest growing economies with 6.5%, 7%, 7.5%, depending on which way you believe it will. But let's say, or when the numbers show up. But would economies like that have markets which are outperforming?
It's entirely possible, and I don't know the factors that drive a lot of different major economies. You mentioned India, and the growth and the strength in the economy here is astounding. And it is not as tied to generative AI as some of the other major economies. So it's entirely possible that you do see a decoupling of some form between what goes on in India or other markets and what you've seen in some of the developed markets. But I do feel like there's been one major force that's driven most of the major economies, and if that rolls over, I think you're going to see a lot of pain in the developed economy financial markets.
Very interesting. What do you think about the next 5-year cycle then? I mean, let's assume that what you're saying turns out to be true, in that we might, if we do see some bit of AI spend come off and there being a low growth or a recessionary phase, could this be a long-lasting one, considering that geopolitical stress is also quite high? Or could central banking decisions rev up growth? Because we know that post-2020, effectively central banks decided, right?